Of those tariffs. In the Fed news, President Trump saying he would likely nominate a temporary Fed governor to Adriana Kugler's soon-to-be vacant seat. I believe that is as soon as tomorrow. Meanwhile, a real discussion about what this means for Fed policy. Jim Bianco of Bianco Research writing this. Trump suggested he would appoint someone to finish out the term through January 2026. Presumably, that would be Kevin Hassett. In other words, Hassett would have a 5-month trial run. Jim joins us now. Jim, one thing that you pointed to is that in this push to cut rates, you think the Fed is going to make a policy error. Why do you think so?
Because I don't think it's necessary. I think that we've lost the sight as to what is interest rates and what is appropriate interest rate. President Trump keeps talking about that we're the hottest country ever. Everybody wants to be in their country. Look, I agree with him. But what he seems to be implying is we're the best credit rating, so we should have the lowest interest rates. That's not how you set sovereign yields. That's how you price a mortgage on Trump Tower in Manhattan. The way you set sovereign yields is the combination of growth, inflation expectations, and supply should determine kind of a natural or neutral interest rate. And right now, that looks like, on the long end of the yield curve, somewhere around 4.5% to 5%, which is where we are right now, which is why the market has been meandering sideways. Now, if the Fed wants to cut rates and add extra stimulus into the economy, because that's presumably what they're going to do, they could push those numbers up. You know, faster growth, potentially higher inflation, and that could wind up pushing up the long end of the yield curve, like we saw last year. The yield curve went up, I think, or the long end of the yield curve, 10-year yields rose when the Fed was cutting rates, largely because after the Fed started cutting rates, the economy started to rebound, and it did what it was supposed to naturally do.
Jim, we saw the labor market report on Friday really change the tone of a number of people on the Federal Reserve. The fact that the revisions came in at the greatest pace going back to the height of the pandemic caused a lot of Fed officials to start talking about rate cuts. Lisa Cook coming out and saying these revisions are somewhat typical of turning points. How do you view that, given the fact that there are other people saying they're seeing real softness in the jobs market?
Because there is softness in the jobs market, and they are, signaling or you see them at turning points. But what is the turning point that we're seeing? And the answer is the thing that very few people are talking about. Labor market statistics are measures of population growth. We've shut the border on this, and we have got net immigration at zero. President Trump tweeted this out the other day, or put it on Truth Social, that we have net negative immigration for the first time in 50 years. And that might be correct, or it's very close to zero either way. That means we've got no population growth. That means that the U.S. economy might only need to create 10 or 20,000 jobs a month in order to meet the population growth and new entrants into the economy. But we're all operating under this assumption that normal is 100, 150,000 jobs a month, and that's why there's this rush to cut rates and stimulate. Well, if you're going to do that and try and force the U.S. economy to create more jobs than population growth would demand, that means you're just going to have to drag more people into the workforce, and you do that by raising wages. You do that by creating inflation. I think the other side of the equation, how many jobs do we need to create, is not being discussed, and it's not being discussed because there is no population growth, and that number might be trending towards zero. The American Enterprise Institute has said by next year that break-even number might actually be as low as zero.
Jim, the president said yesterday, following reporting we had, that he plans to go with a temporary approach to fill the Kugler seat. How do you think the market will respond to that?
I'm wondering how they're going to, what is this, Apprentice Season 1, the Federal Reserve is what we're going with this. I mean, basically...
Game of Thrones, but yes.
Or Game of Thrones, either way. I think either way, the issue you're going to have is, assuming he appoints somebody this weekend for this temporary role, and assuming it's a trial that person could also be the permanent person and eventually the Federal Reserve chairman. I don't think they're going to get approved by the Senate before the September 17th meeting. I know Trump will try to get them approved. maybe they don't even get approved by the October 30th meeting. They might only be there in time to cast a decision for one or maybe two meetings, and then they'll have to make a decision, at the end of the year. So I think initially the market will look at it, assuming it's one of the four names that we continue to throw out and it's not an outlier name that no one has discussed. I think the market will look past it at least for a little while, because that person probably is still going to be a few months away from actually casting votes.
Well, what if it is someone like a Kevin Hassett or Kevin Warsh? Do they then basically become the shadow Fed chair? And how confusing might that be for market participants?
Yeah, I think they will become this shadow Fed chair, and it will be a little bit confusing because the market will look at a Warsh or a Hassett, or if it's a Waller, and ask the question, what are they going to do after May, assuming that they May of next year, assuming that they are the Federal Reserve chairman, and that will diminish Jay Powell's role and increase their role. And if they're at odds with what Jay Powell is saying, then I think that could create some real confusion. If it's a name that none of us are talking about that gets it, then we'll be asking the question, will they even be there after January? And that's a whole different discussion.
Jim Bianco of Bianco Research, thank you so much for those insights. It's important to hear the other side. It's amazing to see how much dissent there is right now among market participants.